After hitting the highest level of unemployment the country has seen since the Great Depression in April, the unemployment rate has steadily fallen, but as of this month, the unemployment rate is still 2.7% points higher than it was pre-pandemic. So, hey, there's a lot of talk about we're going to see some sort of 1950s recovery here, but it seems like a long road to meet. Bubba, what's your take?
Danielle, I don't even think we're close. I think we're more closer to a meltdown in markets. I mean, if you look across the board, first of all, you've got a political battle for money. Okay. The whole pandemic is over money now. This is the thing. So you talk about the minimum wage, which is going to eliminate more jobs because people, companies have the ability to go to automation like Domino's Pizza, McDonald's. They're already experimenting with it. So they'll get rid of the employees. There won't be any. Okay. Then you talk about the bond market that's telling us that there's something wrong in the economy. Bonds are the biggest market in the world by 10 times. Okay, they're saying that there's inflation. No matter what Jerome Powell says about inflation, you have inflation in this country. It is at a staggering pace. And what we're probably going to end up with is stagflation versus anything, which will bring us back to the Jimmy Carter. I don't see anything in this administration has been totally ridiculous in getting rid of our own shacking and drilling. Because look at what happened to the price of oil since the election. The price has doubled. Ask any farmer if there's inflation. They'll tell you that they're paying so much more for fertilizer, for fuel, that it's hard to make a living. And this is not going to create anything good with still many of the states still shut down. And again, it comes back to the battle for money, which is always a bad deal.
And you nailed it. Bond markets, they say they are the smartest markets, and we should be paying attention to what they're saying. So, overall here, we got a weak job market. We have a housing market that's on fire. We have stocks, near all-time highs. We have Americans apparently saving more and spending less. So what is an investor to do here with all this information, Bubba?
Well, I think first of all, investors should learn how to hedge their portfolios, and these conditions wouldn't matter. But if I'm looking for new money, where to go, I think you have to look into, like the online gambling type of stuff, DraftKings, those kind of plays, because we're seeing more and more people play online gambling. Okay. You're seeing more and more between fantasy and wagering. They're becoming very big. I think you want to look into the cannabis industry because I think, this government is going to have to federally mandate, legalization of marijuana, because they can then use it for tax bases. And because we've got so much debt, obviously, so those are, I think, all good areas that will not be affected by what I think is coming. And I do think we're going to see a very dramatic, as we're already seeing a tech wreck. Okay. And if you say housing is going bananas, there's a problem. We're not working and we're buying houses. How are we going to finance all this? This is more of the free money Fed, which is not free because the taxpayers will end up bailing it out again. When you lift the restrictions off of banks, okay, and you tell them, you don't have to worry about the 10-to-1 fractional lending anymore. There's no restriction, just lend away. Well, who do you think's going to end up paying for all that when it's over? It's going to be us, the taxpayer, with less jobs and less money.
Bubba, what kind of a correction, when you say meltdown, are we talking? I mean, look, I had Harry Dent on, Jim Rogers saying they wouldn't be surprised if they'd see a huge correction, as early as April.
I don't like to give dates because I have no idea. Because the trends are the trends, and whether they're short term or long term, they are what they are. And again, remember, markets, no matter what's happened through the collapse of 08 through 87, 01, you still got a market that has averaged a gain of 8.5% year over year. So, when, I can't tell you, but this could be the start. But you're seeing action that's contrary to that right at the moment. But of course, we expected a pretty big dead cat bounce. Anyways, the real truth will be that the story will be told over the next few weeks, maybe a couple of months, as to how the action really trades out. But I do see a 50% correction possibly coming at some point.
Wow. I'm assuming you're protecting yourself with gold and silver.
Well, actually, I hedge my portfolio through options and through derivatives. I mean, I have a whole program on that, but I like gold and silver. I mean, right now, honestly, I'm short both as a trader. But as you know, I'm a big buyer of the physicals all the time. So I am storing the gold, but as a trade. Now, again, you have to remember the difference, trading and investing. As a trader, I'm short at the moment. I've been short gold since January. So think about the dip in gold. But overall, I mean, gold's going to be much higher over time, and there will be a time to run for it. But right now, I think obviously in a trading environment, if you're looking to make a trade, you want to be a seller. But if you're looking to be a long-term investor, you're a buyer, because you should always be a buyer.
You're not going to be surprised to hear this. I've been getting a lot of emails, investors frustrated by gold's performance. It's been in bearish territory since August of 2020. You know, they're seeing the market action in the altcoins, in Bitcoin. They want that energy in the gold space, Bubba.
Well, you're never going to really see that kind of energy in the gold space. I mean, you'll see steady energy. But really what the crypto world is telling everybody is that it's a libertarian real world, and they're fed up with the central bank intervention. You know, it appears that the world governments are headed towards a global coin for themselves. Okay, and it'll be one currency throughout the world. So there won't be a reserve currency. What a mess that's going to be, because of course, this is what destroys all systems, is the playing with the fiat currency. But gold, listen, gold's stable, it always will be, and it will grow. Listen, gold will probably someday, be 4, 5, 6,000. Who knows? I mean, nobody knows the numbers of where we're going to go, but it's just a multiplication factor of the average gain year over year. Eventually it gets there, but it's not going to get the kind of energy that you expect. Maybe silver could, because of what it does.
So, just to sum up here, Bubba, and to wrap, would you say it's similar to that post-08 world where the market just wished everything would go back to normal, but it didn't understand the extent of the damage yet?
Yes, I think we are exactly in that position. And I'm going to say the same thing today that I said in 08. Whoever can't make it, and there'll be many banks that will be in trouble when this all melts down, let them go out of business. You want to bail out somebody, bail out the depositors and screw the banks, because they get nothing but a free ride anyways.